The Petroyuan War. How sanctions and wars are challenging the dollar. The silent currency war. For more than 50 years, one system has quietly ruled the global economy. Not armies, not alliances, but oil. Since the 1970s, almost every barrel of oil sold on Earth has been priced in one currency, the US dollar. This system became known as the petrodollar. It created enormous power for the United States. If countries wanted energy, they needed dollars. If they needed dollars, they had to participate in the US financial system. But today, something is changing. A slow but significant shift is taking place in global energy markets. A new idea is emerging. An alternative system where oil is traded not in dollars, but in Chinese yuan. Some call it the Petroyuan. And the most surprising part? This shift is not happening because of economic theory. It is happening because of wars, sanctions, and geopolitical confrontation. From the Russia-Ukraine war, to the sanctions on Iran, to tensions in the Strait of Hormuz. Every crisis seems to push more countries to consider alternatives to the dollar. But the real question is this the beginning of a new global financial order? Or just a temporary reaction to political pressure? The system that built American power. To understand the rise of the petro-yuan, we must first understand the system it challenges. The petrodollar system began in the 1970s. After the 1973 oil crisis, the United States made a strategic agreement with Saudi Arabia. The deal was simple. Saudi Arabia would sell oil exclusively in US dollars. In return, the United States would provide military protection and political support. Soon, the entire oil exporting world followed. From the Middle East to Africa, from Russia to Latin America, oil became a dollar-priced commodity. This created massive global demand for the US currency. Countries accumulated dollar reserves. Oil producers invested their profits in American financial markets. This cycle strengthened the dollar and reinforced American economic influence. For decades, the system remained largely unchallenged. But geopolitics began to change, and with it, the rules of energy trade began to evolve. The Ukraine War and the First Shock. The first major crack appeared in 2022. When Russia invaded Ukraine, Western nations responded with the largest sanctions campaign in modern history. Russian banks were cut off from the global financial system. Access to the SWIFT payment network was restricted. Russian assets were frozen, and Western countries attempted to reduce purchases of Russian energy. For Moscow, this created a major problem. Oil and gas exports were the backbone of the Russian economy. Without access to the dollar system, how could Russia continue selling energy? The answer came from the East, China. China had long wanted to expand the global use of its currency, the yuan, also called the renminbi. The Ukraine war provided the perfect opportunity. Within months, energy trade between Russia and China began shifting toward local currencies. By 2023, large portions of Russian oil exports to China were being settled in yuan rather than dollars. Russian officials confirmed that energy trade between the two countries increasingly used yuan and rubles instead of Western currencies. The scale was enormous. China had already become one of Russia's biggest energy customers, and this new payment structure allowed both countries to bypass Western sanctions. This was not just a trade adjustment, it was the beginning of a new financial channel outside the dollar system. Iran, the sanctions laboratory. But Russia was not the first country forced to experiment with alternatives to the dollar. That role belonged to Iran. For decades, Iran has faced heavy sanctions from the United States and its allies. These sanctions targeted Iran's banking sector and oil exports. The goal was to isolate Iran economically. Yet, Iran remained one of the world's largest oil producers. And someone was still willing to buy: China. Over time, China became Iran's primary oil customer. By 2025, China was buying more than 80% of Iran's exported oil shipments, according to energy analytics data. Many of these transactions avoided the dollar system entirely. Instead, payments were made through alternative financial structures, sometimes in yuan, sometimes through barter agreements, sometimes through intermediary trading companies. Sanctions had created an unintended effect. They forced Iran and China to develop new financial channels. And those channels became the early foundations of the Petroyuan ecosystem. China's long strategy. China's interest in the yuan-based oil market is not accidental. It is part of a much broader strategy. China is the world's largest importer of oil. Every year, it spends hundreds of billions of dollars on energy. Most of those purchases are still priced in dollars. This creates a vulnerability. Because the dollar system is ultimately controlled by the United States. If geopolitical tensions rise, access to that system could be restricted. China's leadership understands this risk. That is why Beijing has spent years trying to internationalize the yuan. This strategy includes several major steps. First, China launched yuan-denominated oil futures markets in Shanghai. Second, China built cross-border payment systems that bypass Western financial networks. Third, China encouraged energy exporters to accept yuan payments. In some cases, this effort has already produced results. In October 2023, one of the first crude oil purchases was settled using China's digital yuan system, marking a milestone in energy trade experimentation. The message was clear. China wants the yuan to become a global energy currency. Saudi Arabia and the petrodollar question. If one country holds the key to the future of the petrodollar, it is Saudi Arabia. Saudi Arabia is the world's largest oil exporter, and historically, it has been the central pillar of the dollar-based oil system. But relations between Washington and Riyadh have become more complicated in recent years. At the same time, China has emerged as Saudi Arabia's largest oil customer. This has opened the door to new conversations. In 2022, Saudi officials began discussing the possibility of pricing some oil sales to China in Chinese yuan instead of dollars. Although the change has not yet been fully implemented, even the discussion itself was significant. For the first time in decades, the possibility of non-dollar oil pricing was being considered by one of the architects of the petrodollar system. Meanwhile, energy trade between the two countries continues to grow. Saudi Arabia regularly ships millions of barrels of oil to Chinese refiners each month. And Chinese companies have invested billions of dollars in Saudi petrochemical projects. These growing ties are slowly reshaping the global energy landscape. Expanding the network. Russia and Iran are not the only countries involved in yuan-based energy trade. Other nations have begun experimenting with similar systems. For example, some Russian oil cargoes sold to Indian refiners have been paid for using Chinese yuan as part of complex financial arrangements. Meanwhile, China and Saudi Arabia signed a 50 billion yuan currency swap agreement in November 2023, designed to facilitate bilateral trade without relying on the dollar. These agreements do not replace the dollar overnight, but they create new financial pathways. Each new deal expands the ecosystem where energy can be traded outside traditional Western financial structures. The Strait of Hormuz factor. Now, another geopolitical flashpoint could accelerate this trend. The Strait of Hormuz. This narrow waterway between Iran and the Arabian Peninsula is one of the most critical energy choke points on Earth. Roughly 1/5 of the world's oil supply passes through it. Any disruption in the strait can send shockwaves through global markets. Today, tensions between the United States and Iran are rising again. Military strikes, drone attacks, and regional confrontations have created fears of a wider conflict. In this environment, Iran has hinted at new strategies. One of them involves the possibility of linking oil shipments through the region to alternative payment systems. If Western sanctions intensify, Iran may push even more of its energy trade into yuan-based arrangements with China. For Beijing, this could further expand the Petroyuan network. For Washington, it could represent a long-term strategic challenge. The real limits of the Petroyuan. Despite all these developments, the Petroyuan is still far from replacing the dollar. The U.S. currency remains dominant in global finance. Most international oil contracts are still priced in dollars. Global central banks hold the majority of their reserves in dollar assets, and American financial markets remain the deepest and most liquid in the world. Even countries experimenting with yuan energy trade often continue using dollars for other transactions. In reality, what we are witnessing is not a complete replacement. It is a gradual diversification. Countries under sanctions use yuan to bypass restrictions. Others explore it to reduce dependence on the U.S. financial system. But the global economy has not yet shifted fully away from the dollar. A fragmented financial future. Instead of a single dominant currency, the future global system may become more fragmented. Several financial blocks could emerge, one centered around the dollar, another increasingly influenced by the yuan. Others built around regional trade agreements and digital currencies. Wars and sanctions are accelerating this fragmentation. Every time a country is cut off from the Western financial system, it looks for alternatives. And every alternative strengthens the infrastructure of non-dollar trade. This dynamic is reshaping the global economic order, not through sudden revolution, but through slow structural change. The beginning or the illusion? So is the rise of the Petroyuan the beginning of a new era, or just a temporary reaction to geopolitical conflict? The answer may lie somewhere in between. The dollar still dominates global finance, but the monopoly it once held is no longer absolute. Sanctions, wars, and political rivalry are pushing countries to build alternative systems. Russia's oil trade with China, Iran's sanctions-driven exports, Saudi Arabia's currency discussions, and the growing strategic rivalry between Washington and Beijing. All of these forces are shaping a new economic battlefield, a battlefield where currencies compete for influence, and where oil, the most strategic commodity in the world, may determine the winner. The rise of the Petroyuan may not end the petrodollar tomorrow, but it signals something important. For the first time in half a century, the global oil trade is no longer tied to only one currency. And in geopolitics, that kind of shift can change everything.